For more on this, Dan McClory, Managing Director, Head of China, Boustead Securities, joins us. Good to see you, Dan. For our audience, I mean, there's a lot here. It's going to take a long time to explain, but maybe in one or two sentences, what is two sessions?
You know, it's that meeting that brings together the total top to bottom of the political system in China, and key issues are defined and prioritized, and policy statements are made. And there's a lot of reading into those statements that come out for the global economy, for world order, and there's going to be a lot of attention on two sessions this year.
Okay, so it's a planning meeting, right? You voice out your opinions, you have work papers, you have reports, and then there are some decisions that will likely be made, but more importantly, the agenda for the rest of the year as to like what everybody is supposed to do. What are the expectations that perhaps you might have when it comes to the economy specifically in China?
It would be great to hear a very robust projected growth rate. You know, last year was about 3%, and it was intended to be about 5.5%. This year, talking about 5.5%. I think a 6% growth rate for the economy would be something that would be very well received around the world. I think there's going to be some attention paid to the military budget that gets put together. And probably more than anything is, you know, let's see this COVID comeback. Let's see the bounce from COVID zero to a return to economic prosperity. And that will be measured in things like GDP, unemployment rate, but importantly, Phil, the return to a consumption-driven economy. That's a real important area.
And just to put this into perspective, I mean, they recently, at the end of last year, sort of liberalized and loosened all the different policies. And when the other countries did it, it took a little bit of time, but it seems like the revenge travel and revenge spending, and everybody obviously wants to get back to doing the things that they enjoy. We are going to see a lot of these numbers for several months in terms of what happens. So you're sort of in the middle of planning something while everything is still happening at the same time. And I'm not sure the government needs to do anything to get people to travel and spend because they already want to do that. What can government policymakers realistically do to, I guess, manage this growth?
Well, obviously the flip side of revenge travel, especially when it's international, is spending gets exported in some degree. So there's two sides to that coin. I think what we've heard most that government can do is on infrastructure, is local government spending on infrastructure and having that emerge instead of real estate, instead of in some cases speculative real estate, but actual infrastructure. You know, the U.S. Had the infrastructure bill with President Biden to great fanfare, but having local governments in China really get behind infrastructure, having that be backed in some cases financed by the central government in China, is another great way to stimulate the economy.
Well, what would you tell investors who, you know, are here in the U.S. or in Europe or anywhere else in the world, you know, who are watching this, and they think to themselves, well, how does this impact me or our own economy here? And, you know, I obviously have my thoughts, but I'm curious to see how you would answer that.
Well, I'll go back to my comment about consumer-driven economy. So, you know, China's a great market to be selling into. China's got lots of people that want to buy lots of things. So as those people come out of COVID zero, and as they start to make a return to somewhat normalized buying habits and spending patterns, don't overlook the opportunities for the reopening of the Chinese market in terms of leading exports from the U.S. and other places. So that's one thing that I would point out. Second is foreign direct investment. You know, if it was a good deal, you know, 5, 4, 3 years ago, imagine how it looks now. There's lots of good buying opportunities to invest, to make some longer-term bets on China, in a very measured way, not irrational, but a very measured way to come back as China comes back.
I know this, but maybe our audience doesn't. You actually do a tremendous amount of work helping a lot of companies, many of them in China, come and list and raise money here in the U.S., and many of them are operating in the U.S., and they're doing sort of this cross-Pacific business. We earlier talked about some of the stress points between the U.S.-China relations. How has that impacted your business, or if it has?
You know, surprisingly, I'll give you a positive and I'll give you a negative. I'll lead with the positive. You know, China and the U.S. have finally normalized relations over the inspection of auditors. That was a big point of contention. Our PCAOB wanted to inspect China-based auditors, and China said, no, it's a matter of sovereignty. Guess what? There has been a breakthrough there. It is going to be allowed. So that's going to avoid the delisting of Chinese companies on many of the U.S. stock exchanges. So thankfully, that has come to pass. I'll say the flip side is there's been a very anti-China bias in a lot of ways in the U.S. in the stock exchanges, where they have flat out discriminated against Chinese companies. That's starting to turn. We're starting to see, at least in the small cap, lower middle market area, Chinese companies being approved by the Securities and Exchange Commission and being green-lighted by NASDAQ to list. So we hope that that's a sign of a return to normalcy in the near term.
I'm always hopeful and thinking the glass is half full, and I know you as well. Dan, always good. Thank you very much for your insights.
Thanks, Phil.